You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 20th day of June, 2025. Thanks so much for joining us. Wherever you are, we're just glad to have you right here, right now. We're going to do things a little bit different today. Michael is going to come on first. He'll give us a recap of everything that happened in the live training room this morning, then do a little live trading on the TradingView platform. When he's done, I'll be back, and then I will begin with the normal daily broadcast. We'll start out with our daily devotional, a word of prayer, some global news, some Wall Street news, some local news, and we'll go through a granular recap of the alerts, the logic, the concierge trade alerts, and we'll wrap it up with our good word for the day as you head off into your weekend. So stand by. Michael will be taking the screens here in just a second, and we're off to the races. Sit tight. Okay, while we're waiting on Michael, when he comes on, if you haven't taken your 1-week free trial, he's going to show you how to do it. He'll walk you through step by step. It's a piece of cake. If you start your trial today, we'll get your indicators up and running today, but your trial won't officially start until Sunday night, and then I'll run through all of next week, through the close of the markets next Friday afternoon. And keep in mind, today is Triple Witching Day, so while Friday afternoon sessions are typically pretty mild, pretty quiet, you could see an awful lot of activity this afternoon. So be prepared for that. Okay? All right. Everybody's been working for the weekend, and here it is. Stand by for Michael. And here's Michael.
Here I am. Oops. Here I am. Right at 5F.
Perfect.
All right. So I will take everything over here.
Okay.
And we'll get this part of it going.
Okay. Let me get that bad boy centered. There we go. Okay.
Looking good?
Looking good.
Here we go. Let me pull the question box out. Look at that. And here. Okay. Here we go. Let me move that over. minimize that and bring that up. Ready to go. All right. Good afternoon, everyone. Today is Friday, the 20th day of June, 2025. If you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. Just click on that purple button, and it's going to bring you to this registration page. This is for next week. If you actually sign up for the registration, if you sign up now, you get it over the weekend and all of next week as well. But all that we ask for in here is your first name, your last name, your email, your phone number, multiple choice questions. Down at the bottom, it gives you trading view, login ID, right? Trading view, username, user ID, login ID, whatever it is. Just fill it in, and we'll be able to get your indicators indicating on your desktop while you take the trial. All right, that's really where you want to be. All right, so we had a pretty good day this week. Today. We had our best day of the week this week, today. Actually, our best day of the month, today. We were up quite a bit more, but I stopped out like 3 times toward the end. But the way it turned out, if you want to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. We're up 283 ticks on the NQ, 57 ticks on the Russell, minus 30 on gold. We didn't have, after all this money we were making on gold, we didn't make any today. Gold being the one that we're getting our gold for the day, pretty much most of the month. We didn't make any money at all on gold today, and we're up 8 ticks on the ES. So ones that I stopped out on toward the end, I stopped out on a Russell, I stopped out on gold, and I stopped out on the ES. So those are big ones. Anyway, we ended up the morning session with a plus $1,500 a contract, right? Excuse me. Plus $1,500 per contract. Today it took 2 minutes and 1 trade to get the $1,250. That is with 10 contracts on. And we took a total of 27 trades this morning. So on the month now, we're at $10,930. Right, $10,930 with 1 contract over 12 business days, averaging $910 per contract per 2-hour business day. On the year now, we're at $151,400. Again, that is with 1 contract over 103 business days, averaging $1,469 per contract per 2-hour business day. Now, if you were to quit trading when you get the goal for the day and you were to add 1 contract per month, so far this year, you would have only had to work 12.85 hours. You'd be on your 6th contract right now. You'd be up $56,577 if you did it just like me. So you'd be averaging $4,402 per hour for those 12.85 hours. Now, that doesn't mean you're going to sit down for an hour and make $4,400. What it means is we had a lot of days where you sat down for 1 minute and made 100 or made 1,000, depending on how many contracts you had on. For me, it was making 1,000, at least 1,000. We sat down for 1 minute or 1 trade. And so far this month, we have 12 days, and 1, 2, 3, 4, 5, 6, 7, 8, 9 out of 12 days we got it on the first trade. 9 out of 12. It's a pretty good percentage of getting it on the very first trade. Anyway, let's get into the trades. Let's get into the trades that we did do. We'll start out with the gold. Since we didn't have a ton of trades on the gold, and we stopped out on the gold twice. Looks like I didn't enter in my second stop on gold, wherever that was. We started out with a break even on gold, and then we stopped out right there, minus 15. And then the next one where I stopped out was, I don't know where it was, but I stopped out again on gold. And we ended up with minus 30 on the gold. All right, and during the break, there wasn't really much happening here during the break. We're below the YVR, so we're looking for things to come out of the overbought. There was 1 right here you could have done aggressively, or if you waited for the conservative trade, you probably wouldn't have gotten anything out of that. But aggressively at the midpoint right there, you could have shorted that. That was all you had. There wasn't really much there on the gold during the break. Okay, and we'll go to Russell next. We'll just go right across. We'll go to Russell next. On the Russell, we ended up with 57 ticks. And if I go all the way back here to the beginning of the day, This is where we started out on the Russell. The very first trade on the Russell was 25 ticks right there. That is where we got the goal for the day, I think. That first trade on the Russell, 25 ticks there. Then we had a break even. Then we had another break even. Then we had another break even. Then we had another break even. So we had a lot of break evens on the Russell today. And then finally we got some more traction. We went from 25 to 27. So we got 2 ticks there. Then went from 27 to 37. So we had 10 ticks there. And then we went from 37. There's some trades missing in here. We went from 37 to 47 and then 47 to 57. So there's 2 more 10-tick trades missing in there. I don't know where they are exactly. I think this was one right here. And I don't know where the other one is. But there were 2 more 10-tick trades missing in there. And during the break, let's see, during the break, we would have been looking for the up close after this right here. So the up close would have been right there. That would have been an okay trade to take right there. This one, we would have been looking for the up close coming off. So that would have been an okay trade to take right there. Then we really didn't get anything else. We had 2 good trades during the break. Right? And that was the Russell. We ended up with plus 57 ticks on the Russell. Now the ES, you can go back here to the beginning. Here it is. On the ES, we started out here with plus 4 ticks. And then we went to plus 10 ticks. We got a 6-tick trade there. And then we went to plus 18 ticks. So we had an 8-tick trade there. And then we had a break even. And then we stopped out, went back down to 8. And we had another break even. And that was it. And that was it on the ES. Now during the break, there was a trade right here during the break. All right. And that, when it pulled back down here, it was nowhere near the midpoint. It pulled back down here. It was pretty close to the midpoint. You could have taken that aggressively, actually. It would have been a break even if you took it aggressively. There was no conservative trade in there. Then over here, you were looking to short, and you didn't get anything to short in there. All right, and that was the ES. So we're plus 8 on the ES. Now the NQ, we had a big day on the NQ. We haven't had a big day like this in a while. 283 ticks. That's our biggest day of the month on the NQ. It's bigger than any day last month. Bigger than almost any day, all the way back to April 1st. We had 516 ticks on April 1st. So it's a couple of months. Now, before that, we had regularly had pretty good days. But it's been a while since we had a big day on the NQ. And so we did. So that was good. And we'll go back to the beginning of it all. We did have a couple of stop outs in there today, too. We still ended up doing well. So here on the NQ was our first trade. We ended up picking 68 ticks out of that one. Then 75 ticks on that one to get us to 142. Then another 75 there to get us to 217. Then 4 ticks there to get us to 221. Then 15 ticks or 16 ticks to get us to 237. Then we stopped out and went down to 177. We had a break even. Then we had a 75, I think, to get us up to 252. Another 75 to get us to 327. Then a 4 tick to get us to 331. Then we stopped out again down to 271. And then we had a 12 tick trade, it looks like right there, to get us to 283. And that is where we ended it on the NQ. So we didn't miss too much today on the NQ. And it was pretty good trading today. Pretty good trading on the NQ. During the break. Now, when I'm looking at this stuff during the break, what I'm looking for is when we get into the overbought, where were we at here with respect to the midpoint? Nothing there. This one, we got into the overbought right at the midpoint. So that would have been a trade right there. All right, we're still below the YBR, so we're still looking for the same thing. Right here, we get into the overbought, we're above the midpoint, no trade there. Right here, you get into the overbought, we're above the midpoint, no trade there. You would have been looking for a down close there, you didn't get it. Right now, you're above the midpoint, so you're looking for the oversold. You into the oversold here, you're nowhere near the midpoint, no trade there. You're here, getting into the oversold, nowhere near the midpoint, no trade there. Moves over a little bit further, you're now below the midpoint. and you blow the YBR, so you're looking for it to get into the overbought. No trade there. Now it gets all choppy in here, so you would have to switch tactics in here and just sell the open of the next bar. Right here we get the same thing going up and down like that. You can tell that it's choppy, so you can switch tactics here and just sell the open of that bar, then sell the open of that bar, and you would have actually, that didn't make it into the oversold. Actually, wouldn't have even done this one. You would have just done that first one, sold the open of that bar. But it didn't make it into the oversold, so you wouldn't have done the next one. And that was it. So on the NQ, we ended up with 283 ticks. Okay, 283 ticks. And now, for anybody that's coming on right now on YouTube, if you haven't taken a free trial, go to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Click that. It's going to bring you to the registration page. Just fill out this page. Once you fill it out, you'll be sent everything you need to get your indicators indicating. Down here at the bottom, you got to give us a TradingView login ID. If you don't have one, click this right here to go and watch a video on how to get them. Okay? That's all you need to do. Now, back in here, let's see what we can trade. Right now, we're below the YBR. We're also below the oversold. So an up close on this bar is going to put us here, and up close on the next bar will put us right at the midpoint. So there's potential for a short trade coming up here on the NQ. All right. On the ES, it's going to take a couple more bars to get us up to the midpoint. On the Russell, there's a potential on the Russell too for a short trade. Okay. And over here on the gold, we don't have anything. So the NQ and the Russell, the two closest ones to a trade right now. Now let me point out why that is so. Okay. One up close puts you here, and the next up close will put you here. All right. The next up close will also put you in the overbought. One up close put you here. The next up close is going to put you here, which is going to be in the overbought. So you're going to need another up close after that, which is going to flatten you out in the overbought. So you have the potential for an aggressive trade on the NQ, conservative trade on the ES, and an aggressive trade on the Russell. Okay. What's the difference? Well, with a conservative trade, you wait for it to come out of the overbought. See, like right now, we just got into the overbought, but we're nowhere near the midpoint. We need another up close to get up there. If we get an up close here or here, we're going to be right at the midpoint. You can sell the open of the next bar. So on the Russell, it's got a low here of 23.1. Is it still 23.1? Yeah. So I could sell 24.1 like this. All right, just put a limit order there. The price gets up there, it's going to hit 24. If it closes up, it'll hit 24.1 and we'll sell it. It'll be right there at the midpoint. You can do the same thing over here with the NQ. It's got a low right here of 42.75, so it would be 54.75. Okay. 54.75. If that low stays where it is, and if this low stays where it is, then those are good trades. See, the ES came out of the overbought right there. Excuse me, came out of the overbought, but it didn't go up and hit the midpoint. So that's not a good trade there on the ES. Now we're in the Russell trade because it did what we're looking at, and we're in the NQ trade because it did what we're looking at. So I'll bring them both over. So here's our NQ trade and here's our Russell trade. Okay, both of those were aggressive. I didn't wait for the down close. All right, I probably should have on the NQ. We're too far away from it on the NQ. I probably should have waited for the down close on that one. But it's at the midpoint, and the down close now will put us right back at the entry point. So we'd end up in the same place, basically. There's a little bit away from me here too on the Russell. I was a little bit over aggressive on both of those. But hopefully they're both going to close down and we'll end up getting what we wanted. The Russell's pretty close to stopping me out though. It should move down. We'll see. I think it will eventually, even if it stops me, I don't think it's eventually going to move me down. I jumped both of those a little bit early on the aggressive trade. I should have waited for the down close on both of them. So you guys should wait for the down close right here. Okay. And we're getting there. The ES is dropping a little bit here. The other indices should start dropping with it. Here we go. So now there's the down close. That would be your entry point now on that one. And here's the down close over here on the Russell. So my entry point is off by about a point on this one and about 4 or 5 ticks on the Russell. Okay. Usually when you're aggressive, you get a better entry point, not a worse entry point. But I was a little overzealous there today. And so what we anticipate is this is going to get down here to the prior swing low, and this is going to get down here to the prior swing low. That's what we anticipate with both of these. Now this has to get to 50, and this has to just get down to 0.6. Okay, it's got down to 3.9 so far, and this hasn't gotten, this number has to go to 50. Okay, if you would have gotten in at the right place there on the down close over here, then both of those you probably would have been on a break-even round. So we're both close enough, I think. If you didn't do the aggressive trade like me, you would have gotten in 5 or 6 ticks better. And you would have been on a break-even here on the Russell. It looks like that might stop me out. And you would have been on a break-even on the NQ as well. Now, I want to just point something out. One thing you never see me do, even if I make a mistake, you never see me move my stop away. To give it more room in case I'm right, that it was just me making a mistake that's caused this problem. I never move that stop. That stop is solid always. From where I enter, that stop stays the same. So this has to get to 50, and this has to get to 5. Okay. So we just wait it out. Russell's going to get me, I think. It's kind of above 100% retracement right there. It could fail off the 100% retracement. We're in chop on both of these right now. You see that? And the Russell got me. And now we'll see if the NQ does. That's my stop on the NQ. All right, so we could get it back here on the NQ. That needs to get up to 50. Just cut the 47.5. I think we're going to get it. There it goes. Okay, stop to break even on the NQ. And so the NQ is going to easily make up for that Russell trade. We're at 54.75. We'll go down to 47.75. That makes up for the Russell trade, and then some. The Russell trade was only 15 tick stop, right? We just made whatever we made there on the NQ. So it's a net positive out of those two trades. Oh, we're still in the NQ. Sorry, we're still in the NQ. Right? So it's a net positive. 54 down to 47. That is 7 points. So 28 ticks. And so we ended up positive 13 ticks between the two of those. And the Russell did end up going down. Look, it did end up going down and doing what it should do. It just stopped me out pretty much to the tick there. Oh well, that happens. Ue erupts. Yes, a few guys we got out there in Hawaii right now. So that ended up being a win, and this ended up stopping me out pretty much to the tick. All right, so next, right here on the ES, a down close here on the ES would work. All right, you're off the 50%, you're in the overbought, you need the down close. Now you're at 100%. So it's kind of jammed up in here now. 24.50 down to 22.50. It's kind of jammed up. 24.75, 25, 25.50. I don't like this one anymore. I'm going to cancel it. Right. It's going to flip the YBR right here. This is going to flip the YBR. This is going to flip the YBR. So we really don't have any trade right now. Cancel that. It's left it on there. Yes, canceled. All right. Does anybody have any questions at this point? I wouldn't do anything with this right now, okay, or this right now. Just leave it alone. Don't do anything with it right now. Okay, So in that flurry of trades that we had there, we picked up 28 ticks on that one, and we lost 15 on that one. Oh, I just remembered something. All right. We now on gold, we're above the YBR. We're at the midpoint right now, but we're not in the oversold, so that's not going to be a good place to trade from. We're above the YBR here on the ES. We're not going to get a trade on this either. It needs to give us 2 down closes right now. On the ES, at least 2 down closes. The NQ is kind of crunched up. We don't want to do anything there. And the Russell's a little bit crunched up, so we don't really want to do anything there either. All right. So we're looking for this to get down here. This one's there. We've got a down close on the NQ. We only have a minute left, so I'm probably not going to do it. But if you get a down close on the NQ, it'll be below the midpoint, but it'll be in the oversold. So you could wait for an up close after that will get you back up above the midpoint. And it'll take you out of the oversold. It'll be a conservative trade off the midpoint. Okay. That's what that would be. 21,860 is that last week's close, James? Interesting. Symmetry in numbers. You know, I love that. When things just come together. Okay, so we need the down close here.
Right now.
Oh. Do the bass. Boom, boom. All right. So Nothing's getting ready for his bluegrass concert. All right, there's a trade off the midpoint here on the Russell. There's a trade off the midpoint on the ES, but I'm just not going to do these right now because it's time for me to wrap it up. All right, I'll wrap it up now. So let me show you this. If you go here to mytradingiq.com and click on the purple button right here, there's no credit card required for the trial. There's no credit card required for the trial. Just showing you these trades. They're both working right now. I'm not going to go into that. There's no credit card required for the trial. Click on that. It's going to bring you to the registration page. Just fill out this form right down at the bottom. If you don't have a TradingView login ID, I'm going to break even on both of those, by the way. If you don't have a TradingView login ID, then click that link and go get one. Stick it in there, and we'll get your stuff going for you. Here, I'm just going to lock in some profit on this one. It's 5 ticks on that, and 2 ticks on that. So that's $25 or 250 with 10 contracts on, and that's $25 or 250 with 10 contracts on. That's $500 we just made in those 2 trades. And that is it. With that, I'm going to pass it back off to fabulous Phoenix, Arizona, and Studio A. We're looking south of Holland, America's largest city park. Dwayne is ready.
I am. Recap of the morning session.
Today it took 2 minutes and 1 trade to get to $1,250.
Great way to end the week.
Yes, fantastically.
All right, guys. Michael, have a great weekend. And
you too, be safe, make good decisions.
Yes, thank you. I will.
Come back safe.
Yes. That's my plan.
All right.
I got to run over to the tire shop. We got a tire that's slowly losing air, so I'm going to get that fixed before we take off.
Yes, make sure you have a spare, just in case.
Yeah, we got one. Okay.
All right.
All right, guys, we're going to pick up where we normally start the broadcast, and that's with our daily devotional. And the topic that we're on right now, why trust the Bible? Our scripture today is Genesis 1:27 from the NIV translation. So God created mankind in his own image. In the image of God he created them, male and female. He created them. So, isn't the Bible sexist? Perhaps you've asked or been asked, is the Bible sexist? Cultural messaging about Christianity has created the impression that the Bible casts women as second-class citizens. Yet the words of the Bible tell a different story. On the first page of Genesis, God confirms the dignity and equality of men and women as bearers of his image. In fact, in the creation story, it is the woman Eve who receives the first redemptive promise of the Bible. The Messiah will come through her. Yet a one-word description of Eve has set off centuries of misunderstanding. Eve is described with the Hebrew word ezer, meaning helper. What's overlooked about this description is the fact that ezer is a title God uses of himself. This reframes the traditionally propagated view that as mere helpers, women are secondary to men. Elsewhere in the Old Testament, we meet women who, despite being part of an oppressively patriarchal society, were prophets, prayer warriors, queens, judges, and worship leaders. One of the most widely known women in the Old Testament, the one described in Proverbs 31, is anything but disempowered. She's an entrepreneur who buys and sells land, employs people, studies, teaches, strategizes, cares for the poor, and commands the respect of influential people. The Old Testament also deals tenderly and emphatically with the sufferings of women, those who are longing for children of their own, or those widowed or impoverished. Given these clues about God's view of women, how do we make sense of the admittedly horrendous Old Testament stories of rape, violence, and injustice against them? It's worth noting 2 things. Number 1, these actions are never condoned. Number 2, much of the text of the Old Testament is narrative, not didactic. The author is writing an account of what happened, not telling the reader to go and do likewise. The disturbing stories of the Old Testament, like the disturbing stories in your favorite newsfeed, point to the world's desperate need for Jesus. In the New Testament, we see Jesus interacting with women in radically countercultural ways. He tells stories about women in his parables. He shocks his disciples by having an intense doctrinal discussion with a Samaritan woman to whom he reveals his identity as the Messiah for the first time, no less. He honors Mary by allowing her to sit at his feet. And this isn't his mother, this is the other Mary, one of the other Marys, for a theology class, a position strictly reserved for the male-only followers of a rabbi. And women played prominent roles as witnesses to the most central historical events surrounding Jesus. Mary is the only witness to the annunciation of the virgin birth of Christ. Women stood at the foot of the cross, hearing Jesus' last words, and women first witnessed the empty tomb and the resurrection of Christ. So the first people to preach the good news were women. In Jesus' day, a woman's word was considered unreliable. The fact that it was women who testified to the risen Christ is actually strong evidence for the veracity of the Gospels. No one making up a new religion would have included women in the evidence documents. Both the Old Testament and New Testament attribute to women positions of dignity, strength, and purpose, centering their voices, perspective, needs, and potential, and overturning the entrenched patriarchal biases of the day. Wondrously, Jesus was the ultimate fulfillment of God's original intent for humanity, and Christianity transformed women's lives. May we, as the 21st century church, uphold the Bible's view of gender equality and model it the way Jesus did. And in the Bible, we only read of two genders. I guess after that statement, I better pray. Heavenly Father, thank you for making us in your image with dignity and purpose and worth. Help us to see ourselves and others through your eyes with love, compassion, and grace. May we reflect your character in all we do, bringing honor to the one who formed us. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Friday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up 109 points, but the NASDAQ is down 62. S&P is down 3. Russell 2000 is down 3.5. The dreaded mixed markets. And today's triple witching. So look out this afternoon. In the commodity basket, crude oil down 14 cents, trading $75 last. Gold down $22.20, trading $33.85.80 last. Silver, silver down $1, trading $35.91 last. That's a drop of 2.75%, or $5,000 per contract traded. In the Asian markets at the close, Nikkei down 85, Shanghai down 2, but the Hang Seng is up 292. That's a gain of over 1.25%. And in the European markets at the close, FTSE down 17, the DAX up 293, over 1.25%, and the CAC up 36. So we had a mixed day in Asia. It was a mixed day for the UK, and it's a mixed Radio Friday at the moment here in the US of A. So let's take a look at the global news. Rwanda and the Democratic Republic of Congo agreed this week on a draft agreement to end fighting in eastern DRC. The deal, mediated by the U.S. and Qatar, is due to be signed next week in Washington, D.C. The two countries have engaged in decades of conflict since an estimated 2 million Hutus fled to eastern DRC following the 1994 Rwanda genocide and the rise of the Tutsi government. Iran's foreign minister heads to Geneva today to meet with counterparts from Germany, France, and the UK. The developments come amid ongoing strikes between Israel and Iran, with Iran striking a hospital in the southern Israeli town of Beersheba, and Israel striking Iran's Arak heavy water reactor and other nuclear-related facilities. Europeans hope to secure concessions on Iran's nuclear program after a UN watchdog report last month found the country had enriched 400 kilograms of uranium to 60% purity. Good luck, guys. And boom, 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 boom. Yep, you guessed it, Jaws turns 50. Today marks the 50th anniversary of Jaws, the pop culture phenomenon widely regarded as the first summer blockbuster, passing $100 million at the box office. It marked the second theatrical release from a young Steven Spielberg, propelling him to fame at the age of 28. Located on the fictional Emini Island, shot in Martha's Vineyard, the plot revolves around a police chief, Roy Scheider, and a researcher, Richard Dreyfuss, and a grizzled captain, Robert Shaw, hunting a bloodthirsty great white. The star was arguably Bruce, a nickname for each of the three 25-foot, 1,200-pound mechanical sharks. In addition to the on-screen action, the theme, which I just tried to do, a two-note score referred to as dum dum, has become synonymous with imminent danger. The film more than tripled its $3 million budget and went 2 months over schedule, but ultimately grossed an inflation-adjusted $1.56 billion. A $9 million movie brought in $1.56 billion and is probably still bringing it in today. If you never saw Jaws, that's something to do this weekend. Turning to Wall Street, U.S. stocks turned mostly lower today as investors navigated a flurry of developments across multiple fronts. And for Bloomberg, investors are bracing for $6.5 trillion of notional U.S. options expiring today. Remember, triple witching. In a move that could free stocks to swing more wildly than the subdued changes seen in recent weeks. One Fed, Christopher Waller, he's the Federal Reserve governor, one of the Federal Reserve governors, said the central bank can lower interest rates as soon as next month, reiterating his view that the inflation hit from tariffs is likely to be short-lived. Now that's just one of the governors, but is it possible that the Fed could be coming to their senses? Also from Bloomberg, U.S. President Donald Trump signaled he would give diplomacy a chance before deciding whether to strike Iran, dialing back on recent comments that suggested military action could be imminent. And from Reuters, a U.S. official has informed a leading global semiconductor company, or companies, of plans to cancel waivers allowing them to use American technology in China. Now, that's from the Wall Street Journal. Jeffrey Kessler, Undersecretary of Commerce for Industry and Security at the Commerce Department, told Samsung Electronics, SK Hynix, and Taiwan Semiconductor Manufacturing this week that he wanted to cancel those waivers. And the Federal Reserve's latest monetary policy report, which we got Wednesday. Actually, they released a report to Congress today, this morning, said U.S. inflation is somewhat elevated and the labor market is in solid shape, but suggested that President Donald Trump's tariffs have likely only begun to be felt, and repeated the central bank's view that it can wait for more clarity before taking action. You know, they called Elon big balls. At Jerome, he's no balls. I'm sorry, but the dot plot and everything else supports lowering rates. This has become a grudge match between Donald Trump and Jerome Powell. And who suffers? The American people. I hope they can sort it out, because we really do. Switzerland, they reverted to a zero. See their economy circling the drain. Our economy is actually doing quite well. And last, from Wall Street, China tech investors, weary of the nation's relentless price competition, can look to one pocket that's thriving by moving in the opposite direction: online music. Hong Kong listed shares of Tencent Music Entertainment Group and smaller rival NetEase Cloud Music have more than doubled since the end of 2023, outperforming most Chinese internet peers. That's come as they shift to focus on monetization of their loyal user bases while beefing up their podcast and live event offerings. And what is Tencent trading at? I thought I had it here. I don't. So you have to look it up. Okay, local news. Logic 247 is our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, and silver. Valerie did the recap this morning at 7:30 a.m. Eastern. I did put out some additional alerts since then, so she'll finalize the recap for the week either this afternoon, this evening, or tomorrow morning, and then it will be posted in all the appropriate places. Currently, we're in week 359. Over the last 359 weeks, we have issued over 19,950 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out, based on simple market structure and a simple process we teach all of our passport holders. Now, when Valerie did the recap this morning, since the market opened this past Sunday night at 6 p.m. Eastern, we had issued a total of 57 alerts. 2 never triggered. We were still waiting on the outcome of 7. So that gave us 48 actionable alerts, of which 1 or 2% would have been stopped out. Again, based on simple market structure and the simple process we teach all of our passport holders. Now, every logic alert has an entry price, an initial target to help you get your goal for the day, usually additional targets, and then a final trade to target. Of course, you can trade them, but the real purpose of the logic alerts is to help you learn how to read a chart. You want to be a doctor, you got to read the medical books. You want to be an attorney, you got to read the law books. But with the profession of trading, you got to be able to read the charts. There's no words, no sentences, no paragraphs, no punctuation. But used properly, the Logic 247 alerts will help you learn to read the charts like you've been doing it all your life. It really is quite simple. Once you get beyond the part of, it doesn't make sense, it's chaos. It's not. Now the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is our night session and vice versa. But long before we had a Logic 247, we had our original alert service, the concierge trade alerts. They're different. Number one, they don't come out around the clock. They're posted most days 5 minutes before the Globex open. Yes, today's the Friday session, but it began last night, Thursday night at 6 p.m. Eastern. Now, these targets that you see on the screen, all of our traders and all of our trial members had all of these targets 5 minutes before the market even opened. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So as we go through the individual markets and you see these CTAs on the chart, just remember our traders and trial members had these targets 5 minutes before the market even opened. Now, that's a good thing. Ken says he took his wife to Jaws at the theater just before we got married in November of 75. Yeah, that movie was popular right before I shipped off to boot camp, the U.S. Navy. Okay, time to go to the charts. We'll start where we always do with the S&P 500 E-mini futures, the bellwether. And those of you tuning in via YouTube, you probably lost the stream there for a minute. My apologies. I didn't see that flashing, but it should be running now. Yep, it's running now. Okay. Now I'm going to make this pretty quick today. We identified potential major resistance based on market structure months ago. And slowly but surely, price got there. And once it got there, major resistance will send the market looking for major support, which it found at the daily BBC. And from the daily BBC, we launched up to red and falling, which is potential resistance. And as you can see, after hitting red and falling today during this session, we're now well off the high of the day. The green line is called the VBC. It stands for Bull Bear Cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. Now, price always reverts to the mean. What's really cool is when price reverts to our mean, which is green and called the VBC, the pullback holds more often than it doesn't. Leg, retracement, leg, retracement, leg, retracement, leg, and then we finally traded through, and we know that will eventually happen, just like it did over here. Now we're bullish, and we get a leg and a retracement, a leg and a retracement, leg and a retracement, a leg and a retracement, and see how the pullback held? It holds more often than it doesn't. Okay, and we're sitting right on top of support. That's the low of the day, the BBC. Now, daily charts are important whether you trade stocks, futures, crypto, Forex, ETFs, because institutional traders, the ones who actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So I encourage you, whatever you trade, before you drop to your smaller time frames and start trading, spend 2 minutes with the daily chart. Number one, it gives you a free look over the shoulder of the deep pockets that move price. Are they buying? Are they selling? Have they reached a point of indecision? And you're able to identify major areas of potential resistance and support long before price actually gets there. I challenge you to try it every trading day for a month. A typical month has 20 trading days. If you do that, I don't think you'll ever go back. Okay? Now, all alerts, the logic, and the concierge are created on the 30-minute chart. Nothing magic about 30 minutes, just the time frame I chose many years ago. And they say if it's not broke, leave it alone. The vertical line separates today, Friday. Here's Thursday. Back over here is Wednesday. Okay. Now, we had a gap higher open last night. Okay. This was the opening candle. And remember, our people had these targets 5 minutes ahead of the open. Okay. So, as soon as price got above the BBC, we become what? Bullish. And where do we go? Right up to the long target. Now we traveled through the target and we actually put in a high right here, which as you can see is this high right here from yesterday. That's called market structure. When price runs into resistance, it's going to go look for support. And as I said earlier, the pullback to the BBC holds more often than it doesn't, like this. Support sends the market looking for resistance, which it found at the weekly trading zone. These horizontal lines are the weekly zones. They're published Monday morning at 6:15 a.m. Eastern for the last 15 and a half years. Once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. When price drops to a weekly zone, we expect support until proven otherwise. And when price rallies up to a weekly zone, we expect resistance until proven otherwise. So on this pullback, which held, what's this yellow arrow all about? You see this, where the red line got below the green line? That's called a bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And it certainly was. This was a green candle all the way up until it got to the bearish cross. And then it backed up, back all the way to the zone practically. But on the second attempt, we managed to get through. But then, look where the high of the day is. Look at yesterday's high. See? Okay, now resistance is going to go send the market looking for support. So far the pullback is held, but I don't think it's going to hold because we got red and falling overhead. Now, price can overcome red and falling. But in a situation such as this, I suspect price is going to run into resistance here, and we're going to catch another leg to the downside. Now, as I tell you most every day, when price trades to a long target and then through it, often on the retracement, the top of that long target, or the short target if the market's moving the other way, will become support. Support, support. But right here, let's say you let price get above the BBC, okay? So maybe get at 66,003, okay, up to the target. I'm not counting this up here. That's 12 points, okay? You only need 2 points to get your goal for the day. The Dow. Now remember, the Dow is the only one in the green are seriously in the green today. This was the opening candle last night, right here. Big boy. It closed above the BBC. When you got this much blue and climbing, chasing price, that's when price will usually trade through. Okay? And it did, and it hit the long target, which is simply these highs from yesterday. Resistance, we did make it up to here. Now you see what happened right here? Blue and climbing turned back to red and falling. That's an important price, important area. So that sent price all the way back to the BBC and the pullback held. So then we get another leg and a retracement, a leg and a retracement, pullback held. And then we run all the way up to the next zone, 42,715 / 42,720. Resistance sends the market to support, pullback held, which sends us up to resistance. When blue and climbing gets directly above price, it's usually on its way to turning to red and falling, which, as you can see right there, is good resistance. And yesterday's bearish cross became today's initial resistance. But on the second time up, we managed to get through, ran into the zone, and now here we sit. Price is trapped between resistance and support. The Russell. Here's where the Russell opened last night. Here's where it got above the BBC. And here's where it hit the long target. Then it ran into some trouble at the zone. When price encounters a weekly zone, only one of three things happen. 70% of the times consolidation, 20% of the times rejection, 10% of the time is the slice. Okay? So once we hit that congestion, consolidation at the zone, finally broke through, got a leg, a retracement, a leg, a retracement, the pullback to the BBC held, and sent the Russell up quite significantly. But then, if you were to scroll left, I don't have time today, but you can do it yourself, figure out why the Russell ran into resistance, and you'll be on your way to learning how to read the charts. Now, this window that we drew in days ago finally filled. And this window filled. And filled again. Yesterday, we were off yesterday, but the window we drew Wednesday, as you can see, price came right down through the bottom of the window. And then yesterday, when the markets were quote-unquote closed, we filled that 2120 to 2118 window beautifully. Okay. Then we found support at the zone yesterday afternoon. So we had a gap higher open last night, and there it is. Now we're about to get a bearish cross. Okay. When the red line gets below the green line, you should expect lower prices. If price trades back down through the top of the long target, you got a bullish cross right here. Keep an eye on it. That will probably be good support. We'll call it 2111. Okay. On the NQ, bearish cross from Wednesday became resistance today. Backed up, finally made it through, but then ran into resistance at the zone. We did spike the zone just enough to fill this window that we drew days ago. Okay? It's called planning your work ahead of time. Resistance sends the market back to support. We're getting a bearish cross. So, I would trade this. That's a nice opportunity. 21,810 to 21,785. That's 25 points, $20 a point, is $500 per contract traded. If you've earned the right to trade 10 contracts, well, that's $5,000. Now, on the way down, you see this bullish cross right here? Market found support. When you have a bullish cross that leads to an extended move, the first time price revisits that area, and it is an area, support. And then we spiked it. And we pull back up to the zone where we're consolidating, about to have a bearish cross. So I think this is a very nice opportunity here. And price could trade through the window, take out this low. If it does, then you got another nice window down here, but you got to get below that low. Yeah, like that. Okay. All right. Crude oil. We are on the Q contract now. Yesterday afternoon, we had a huge sell-off into the close. This was the opening candle last night. We bounced up to the BBC. The pullback held. The pullback held, and the pullback held. We did reach down and snag the short target. And then back up to the BBC where we just been consolidating for hours. Now blue and climbing has shown up, so we might just take out. Again, triple witching day, so a lot can happen this afternoon. That's not a forecast, it's just a heads up. So, if price does move higher this afternoon, this is a really nice spot right here. Okay, plenty to get your goal for the day. As far as the short side, this guy right here is still valid. Once you find a true window of opportunity, it remains valid for days, weeks, months, however long, until it will be valid till Jesus comes back or price triggers and enters the window. Okay. This long window we had drawn over here the other day, that got filled beautifully once, then twice. And this window, on the initial move, it didn't get quite at the top of the window. But then, yesterday it did. Gold. Here's the open last night. It's a quick drop to the short target. In fact, it happened in the first 30 minutes. We opened below the VBC, so we're thinking lower prices, and there it was. Now this candle opened at, we'll call it 33.86. That's $600 per contract traded, right there. And price got below the BBC, and if you go look left, you'll find out why the market found support here, and basically put in a double bottom. Support will send the market looking for resistance, and the resistance the market found was this high from yesterday. Now you see that black step line? You see how on the way up it was on the left side of blue and climbing? Now it's crossing. When the step line crosses blue and climbing from the left side to the right side, expect a retracement back to the VBC. Then it becomes a question of whether it's going to hold or not. Okay. On the pullback, if it doesn't hold, got a beautiful little window right here. That would be roughly 33.65 down to 33.61. $400 per contract traded. Now, 33.94 to 97. That would be $300 per contract traded. bump that up just a little bit. You got to get above this high, you got to get above that high. And then, of course, you expect potential resistance at the long target, and that is at the top of that window. Silver dropped $5 per contract today. Then it recovered, and then, well, silver's just had a rough couple days. Here's where we opened last night. Consolidated at the zone. Blue and climbing, turned to red and falling. We're below the BBC. Down we go to the short target. Now, it only takes 2 pennies to get your goal for the day. We opened at 36.31 and dropped to 25. That's 6 pennies. That's $300 per contract traded. And then look at all this. Now, these are the zones that were published Monday morning at 6:15 a.m. Eastern. And what did the market do? It found support. Bounced. Got a little below. Go look way left. You'll figure out why. Okay. Support sends us to resistance. Now, this resistance is basically this little crevice right here. Okay. Resistance sends us looking for support. Okay. That's not really an area that I would have expected support. But think about it. The Logic 247 alerts. Over 19,950 alerts. With 20% or less getting stopped out on a weekly basis. So, while it's impossible to know what's going to happen next in the market, it is very possible to know what the next high probability move is. You just have to accept the fact that sometimes it's going to do something other than the next high probability thing. So this long window would be 3602 to 3605. That right there is $150 per contract traded. Now, if silver starts to sell off again, please don't, then there's your short window. Get along? So no matter what happens, now silver is not the best market for someone who's new to trading. 35.84 down to 35.82. It's 2 pennies. Goal for the day. Okay, is that right? 85 to 82. No, that's $150 per contract traded. Remember, all of our members and all of our trial members had all of these targets 5 minutes before the market opened. Resistance at red and falling, support at the daily BBC. To become a member, go to mytradingiq.com. Watch the videos, consume the content, and when you're ready, send an email to support@cfrn.net. In the email, just say, hey, I want to become a member. And if you're a vet, say, I'm a vet and I want to become a member. If you're a vet, we'll give you, a veteran, we'll give you a little discount. Okay? All right. Now, when you send that email, Valerie's going to send you an email chock full of information explaining everything it means to become a passport holder. Number one, you're going to get 2 hours of live training every trading day. 9:30 a.m. to 11:30 a.m. Eastern. Live trades and live markets. Michael is explaining every trade he takes, every move he makes, and you see the results live in real time right before your eyes. While you're trading along in your demo account and asking every question that pops into your head. It's rules-based trading, and there's only so many rules. So after a couple weeks, maybe a month, you're going to find yourself asking the same question a second time or a third time. And as soon as you ask it, you realize you already know the answer, and then you're going to hear Michael give you the answer, and it will be practically verbatim what the answer was. So the answer never changes. When you get to that point, you're real close to being ready to go live. To go live, you need to put together 10 consecutive days in a row where you reach your goal in 10 trades or less in your demo account. Once you accomplish that, our 24/20 blueprint will walk you through the process of actually going live. Okay? Along with 2 hours of live interactive training every trading day. As a passport holder, you get private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Future, stocks, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts around the clock. The concierge trade alerts the second they're published each evening. On Monday mornings at 6:15 a.m. Eastern, you'll get the weekly trading zones. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Every Thursday afternoon, you'll get an invitation to attend the members-only workshop at 8 p.m. Eastern Thursday night. And you'll get the golden key that opens all the private channels in Telegram. We have public channels and private channels. And while you're on the trial, you're able to actually ask questions of our traders. People just like you who blew up account after account, spent a lot of time and a lot of treasure trying to figure out this business of trading. Now, most places keep you segregated because if you might hear some horror stories. You won't hear any horror stories with us because we work closely through 2 hours of live training and private mentoring and the workshop each week. So you'll be able to ask our traders, hey, how long did it take you? What was your journey like? You know, how many accounts did you blow up before you found this place? And we encourage you to talk to them, okay? Because the last thing you want to do is waste more time and more treasure. If you want to actually learn, the only secret to trading is you need somebody to teach you how to trade. We give you the info, we give you the tools, but what you have to bring to the table is patience and self-discipline. A rules-based system is no good if you don't follow the rules. Okay? It's pretty simple. Everything a trader needs, all under one roof, one low price. All right, we're going to wrap this week up with our good word for the day. Understanding the word imputed. Righteousness shall be imputed to us who believe in him who raised up Jesus our Lord from the dead. Romans 4:22. Picture a transfer of funds from one account to another. Banks do it every day. Now imagine yourself destitute and unable to pay your debts. Then, in an astounding act of grace, someone assumes all your debts and then transfers to your account such abundance that you never have to work or worry for the rest of your life. That's what happened at the cross when God imputed to Jesus all your sins from the cradle to the grave and imputed all his righteousness to you. Kind of mind-blowing, right? Would you say, no thanks, I believe in paying my own way? Would you say, I can't allow you to do everything while I do nothing, so I'll work for the rest of my life to prove myself worthy of your love and grace? I don't think so. Salvation is like health food that's labeled no man-made additives. understand this. The righteousness required for getting into heaven is not about behaving the right way, but believing the right way. And when you believe the right way, you will want to behave the right way. You say, but I feel such guilt when I sin. You're supposed to. Your new nature is reacting to sin just as your body does to food poisoning. Your boundaries have been violated, and your regenerate spirit is saying that you can't indulge in that anymore. It's not who you are. Why did God arrange the plan of salvation in this way? Because any righteousness we could achieve falls far short of His standards. He actually calls it filthy rags. Understand this, your rewards in heaven are based upon your behavior, but your getting into heaven is based on trusting in Christ alone. And that's our good word for the day and for the week. Hope you all have a fantastic weekend. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.